Hi there, this is Michael Kramer of Mach Capital. Today is Tuesday, September 30th, and it's around 4:30 New York time. So at this point, it looks like there's going to be a government shutdown here in the US, and that's going to change things around a little bit when it comes to the economic calendar. We'll still get the ADP report on Wednesday, October 1st. We're looking for 50,000 jobs to have been created, down from 54,000. And we'll also get ISM manufacturing PMI the same morning. We're looking for it to increase to 49 from 48.7. It's most likely that we're not going to get the initial jobless claims and continuing claims on Thursday, October 2nd. We also will not receive the job report on Friday, October 3rd, if the government shutdown hasn't been resolved by then. But we will get the ISM Services Index later that morning, Friday, October 3rd. We're looking for it to decline to 51.7 from 52. So this is going to potentially change how the market may or may not respond to certain data points. So some of these data points, which may have carried normally a little less weight, like ADP, may end up carrying a little bit more weight this time around just because there may not be a job report. I don't know what's going to happen in between now and Friday. Obviously, if the government resolves its issues, then we would get the job report. But if the government is still shut down here in the US, then we will not. And so that may make some of these reports a little bit that haven't been that important in the past a little bit more important. The underlying theme that I've been thinking about more recently is an end of year pain trade, and not necessarily in the way that you would think. The point here is that it seems like a lot of the data here in the US has suddenly started to look surprisingly better. It looks like the euro is really kind of struggling again. After giving us that breakout at 117.6, it looks like we're now back below that level of resistance and unable to get back through it. And also, very importantly, we broke this uptrend that was in place. And also, if you notice, the RSI has slipped as well. So it's starting to look like maybe the dollar could actually strengthen a little bit further. If we're able to get above this 117.5 area, then the next area I would be looking for then comes around 118.5. But again, if it is the case that we are seeing this change in trend, and as we go through some of the other metrics, you'll see why I think that may be the case, then it's more likely than not that we're going to see the euro potentially slip to around 115.7 and maybe lower than that. You can see also with the pound a similar setup. In fact, the pound has been noticeably weaker than the euro, and we can see that the pound has also managed to basically come down to resistance and support at 134. This is a big area again, because if we can get above this 134.20 region, then you can move back towards 136. But if you can't, then it's more likely than not we're going to start seeing it maybe drifting towards 131. We can also see that there's a clear downtrend in the RSI that seems very evident, and right now it seems like momentum favors further weakening of the British pound. When we look at the Japanese yen also, it looks like the yen broke out last week. This week we've seen it come back down and strengthen a little bit versus the dollar, but we really haven't been able to get really much beyond what's now support at 148. So as long as we hold 148, I think we're looking for the yen to potentially head back towards 151. If we break below 148, I think it sets up a retest of that 146.40 area. But again, for the most part, you can see that the RSI has largely been unchanged for some time. But I mean, if you want to kind of look at it from this perspective, you can also make a little bit of a case that maybe there's some sort of slight uptrend in it. Again, it's a little bit of a stretch, but there is right now a little bit of an uptrend. And if we do get data that's better than expected, ISM manufacturing, ISM services, ADP, and the bars are fairly low, you're going to see the dollar probably materially strengthen against all three currency pairs. Gold has been continuing to move higher. We really haven't seen that. We saw a little bit of a consolidation last week for a couple of days, and then we got another move higher. Again, gold has been overbought now for some time. RSI back over 80, back over the upper Bollinger Band. We're looking for something that's a little bit more substantial here when it comes to a potential pullback. Again, when we look at the weekly chart, you can see that the RSI is up to 78, well above the upper Bollinger Band for what's now, 1, 2, 3, 4, 5 weeks. When we look at the monthly chart, also well above the upper Bollinger Band, RSI up over 90 on gold. And we haven't seen those types of overbought conditions really since, again, 1980 or so. The one thing that I think is also worth pointing out is when we look at gold, there's a volatility index that the CBOE has for gold, and the symbol on TradingView is GVZ. And what's interesting about this is that actually more recently we've seen gold prices rising along with implied volatility, and that can sometimes give us a little bit of information about the makeup of the rally. You can see that a little bit better here. It seems to suggest to me that this could be a very speculative type of rally where you have one of these conditions where you're seeing volatility rising with price, and we have seen that before. You can see that taking place here, and that led to that long period of consolidation. You've seen it happen in here. We rose with price, and that also led to that minor pullback. So we have seen this before, and we have conditions that are very overbought, and you've been seeing volatility rising with the price, and those are kind of pretty. I think those are kind of telling us that this is an area where, again, gold should really be topping out here. But again, last week I could have made the same argument, and it hasn't. I thought we'd take a look at oil. Brent has kind of gotten to an interesting point on the chart. You can see that we're sitting right now basically on a very important level of support right around 66. If this 66 level breaks, and let's call it 65 for argument's sake, if 65 breaks, then I think you could really see oil slip back towards the lower end of the range and maybe even breach the 50 level on Brent. Because again, it looks to me like we're really starting to show signs of a commodity that's breaking down, and it doesn't really look promising from a standpoint of the momentum that we're really losing in it. So again, I think 65, 66 is the important area of support, and if that level goes, then I think you're talking about potentially going back into the upper 50s. And I mean, from a bullish standpoint, 69.70 is obviously your big resistance level. It's very possible you get above there, but right now it's not, I think, the preferred path for oil, and we'll just have to see where it is again next week. When we look at the DAX, we've seen it come back a little bit. It really has held support in this 5,500 area fairly well. It looks like we're now kind of getting back towards this upper end of the trading range. Call it somewhere around 23,900 or so. The question, of course, is going to be whether or not the DAX can really get that momentum going again. When you look at the DAX, at least from a standpoint of RSI, here's your RSI. It looks like that's starting to break an uptrend. That looks like it's starting to break a downtrend, and we could actually see potentially the DAX, based on this, pick up momentum and begin to rise. If it does break out above 23,900, I would think we probably go back towards 24,190. And then we'll have to and then at that point we could re-examine it. Again, if this is a fake breakout and a fake move, I would expect that the DAX basically reverse this move right away and go lower from here. But if this breakout on the RSI is real, which as of right now we have no reason to think it isn't, then we could potentially be talking about a good move higher in the DAX. When we look at the FTSE, we see that we've gotten a little bit higher. Again, we've started to move back up. We clearly have been able to pass resistance. And so right now it's looking like the FTSE has some good momentum in it. It looks like the RSI is also giving us a bullish indication with a breakout as well. And so I think right now you're probably looking at a FTSE that probably just continues to rise. I would think more in a slow path, just because we're already above the upper Bollinger Band. And if the Bollinger Band continues to increase like this, then I would expect that, maybe we just grind up towards this 93.50, 96.60 area. Because again, you can still move up based on the RSI. But based on the Bollinger Band, I would expect maybe something like we saw in here, where you got a couple of moves that were in the smaller vicinity, maybe 25, 30 basis points. When we look at the NASDAQ, again, here we're kind of looking at a similar thing, where you have the NASDAQ basically right now trading around 67.5 on the RSI. You have the NASDAQ trading a little bit below the upper Bollinger Band. It could very well be the case that we're going to see the NASDAQ go towards that upper band at 24,990. It's too early to say that there's a trend change forming on the RSI. The one thing I will note is that when you look at the weekly chart, there's still more room to rise as well towards 25,200. But when you look on the monthly chart, again, you can see that we have an RSI well above 70, almost at 76, and well above the upper band. So obviously this is a monthly chart, and a lot of things can change over the course of a month. But as of right now, we could make an argument for the NASDAQ to go a little bit higher here. But again, I think maybe the upper end of the Bollinger Band is probably your strong level of resistance at this point, because that would also put the RSI back into overbought territory. When you look at the S&P, you certainly can make a case for it to maybe move up to 67.35. You can also see that the RSI right now is around 66.90. From a monthly standpoint, RSI is well over 70. We're trading just slightly above the upper Bollinger Band. So again, on the monthly charts, we're overbought. On the daily charts, we still have a little bit more room that we could go to the upside. Certainly also on the weekly chart, this kind of implies 6,800 even. So there's potential here for the market to still go a little bit higher. But again, we're kind of overbought on some of the monthly charts. So I think that this month could be is something that we'll need to pay a lot of attention to when it comes to how things kind of set up. Finally, on the Dow, it's been a little bit of a different story. You've seen the Dow kind of, again, consolidating. There is a little bit of room. It doesn't seem to be quite as much, 46,600 or so, which isn't really a big move from where we are right now. It's not as overbought, certainly, as the other indicators, as the other indexes. You can see RSI much lower than where the others are on the weekly and on the monthly. So the Dow's not nearly as overbought as some of the others. But it also looks like there just isn't as much room for this index to move up. It looks like it's a little bit more limited. Anyway, that's all we're going to have for this week. We'll see you next. Bye.